Hello, crypto enthusiasts. Today, we're delving deep into the potential ramifications of the SEC approving a spot Bitcoin ETF. The crypto community has been waiting for this moment for over a decade. What could this mean for the market? Let's explore. This week, we celebrated the 15th anniversary of the first block mined on the Bitcoin blockchain. It's been a journey, and for more than 10 years, industry leaders have been urging the SEC to greenlight a US spot Bitcoin ETF. Why is this significant? Let's uncover the layers. The SEC has been rejecting every application so far, but the tides may be turning. Analysts are buzzing, predicting approval for at least one of the dozen proposals. Could this be the breakthrough we've all been waiting for? Opinions on the market impact are divided. Gabor Gurbac from Vanek foresees long-term value creation, but others caution against overestimating the initial impact, expecting only a few $100 million in initial flows. Let's dissect these perspectives. To predict the potential effects, let's turn to history. The SPDR Gold Shares ETF and the ProShares Bitcoin strategy. ETF provide insights. Gold ETFs saw significant inflows, and BITO, based on futures, gained $1.5 billion in its first 30 days. How does this history inform our expectations? Now the million-dollar question, how might the market react? Bitcoin has surged 61% since October on ETF expectations. Analysts predict a sell the news pullback post-approval, a pattern we've seen with CME Bitcoin futures and BITO's launch. What could this mean for the price? Considering previous instances like CME Bitcoin futures and BITO's launch, analysts suggest a possible decline in Bitcoin's price. Some even predict a drop to $32,000, citing historical patterns. Are we heading for a correction, or will the market defy expectations? What sets this approval apart? A spot Bitcoin ETF involves actual Bitcoin, reducing supply. Institutional investors gain direct exposure, potentially reshaping the market dynamics. How significant is this shift, and what could it mean for the broader crypto landscape? Drawing parallels with gold ETFs, a report suggests a Bitcoin ETF could lead to nearly $30 billion in additional demand due to Bitcoin's higher volatility compared to gold. Can we anticipate similar patterns, or is the crypto market poised to chart its own course? Shifting gears, let's consider the global economic landscape. With elevated risk-free interest rates worldwide and worsening household finances, how does this macroeconomic environment play into the potential mainstream uptake of spot ETFs? Bitcoin has rallied 61% since early October, largely fueled by expectations of SEC approval. But recent events, like the brief slide to $41,000, raise questions. How do these events impact the overall narrative, and what signals are they sending to investors? A critical aspect to consider is whether we're looking at recycled cash or fresh flows. How does this dynamic influence the market, and what can we learn from past scenarios where similar considerations came into play? As we approach the possible approval, the crypto world holds its breath. Will it be a game changer or a momentary blip? Share your thoughts in the comments below, and don't forget to subscribe for more in-depth analyses. Until next time, happy hodling.